Okay, so GameStop is the famous video game retailer that a few years ago became a so-called meme stock. The so-called swarm traders, many of whom exchanged their views on Reddit, decided that Wall Street was unfairly shorting the stock, and so they bid it up. But of course, GameStop, for many people, had, and maybe still has, a challenge business model. Selling physical games is being outdated by people just downloading their games. Anyway, GameStop came out with its earnings yesterday. We'll check out the stock. The company says it is going to start investing in Bitcoin. We are joined now by Michael Pachter, managing director at Wedbush Securities, and a well-known skeptic on GameStop. He has been expressing doubts about the value of this stock for years with an underperform rating. He still has that. Michael, thank you very much indeed for joining us.
Of course, Andrew. Thanks for having me.
So you have been a GameStop skeptic, but you say, well, we were impressed. They produced what you call a rare operating profit.
They did. They essentially are running their business at a really tiny loss. I mean, 10 million or less in 2 years in a row. And what's actually impressive about that is that their top line in the quarter dropped year over year by about $500 million to 1.3 billion. So, the idea that they're declining that quickly and able to, eke out a profit is pretty impressive. It's attributable to their addition of a trading card business. So they are now doing offering customers trading cards online. So, think hockey player, baseball cards, football cards. And that's boosted their collectibles business. Is pretty high margin. At the same time, they're closing stores like madmen, and I think that's actually appropriate. They closed over 1,000 stores last year on a 5,000 store base. So, that's going to continue. So OPEX is very good. Gross margin is great because of the trading card business. And I think they're slowly liquidating the business, but in the meantime, they have a ton of cash. So stock's worth something.
So they have steadily been just shutting down these physical video game stores?
Yeah, they've gone from roughly 7,000 to under 4,000 now, and they've announced they're exiting Canada and France. They exited Germany last year. I expect that they'll end up U.S. only pretty soon, and probably only really high traffic areas. My expectation is they'll get down to a core group of about 1,500 stores, and probably noodle along breaking even. And then I think their meme investors are hopeful they invest their 4.7 billion in cash productively.
Going into Bitcoin now, they're going to invest at least some of their spare cash in Bitcoin. I guess you could say meme stocks and crypto together at last.
Yeah, it's not at last. I mean, MicroStrategy has been doing it for a while. So, emulation is the most sincere form of flattery. And MicroStrategy figured this out years ago, that they could issue stock and, raise cash and then invest in Bitcoin. And MicroStrategy pretty consistently trades at about twice the value of its Bitcoin, with a core business that barely does any profit at all. GameStop decided to emulate, and the market's bidding GameStop up to about 2.7 times its cash value. So investors are saying, yes, we can invest in a Bitcoin ETF ourselves, but we'd rather pay 2.5 times as much and let GameStop do it for us. Sounds very stupid to me, and I hate to use words like stupid when talking about investors, but there's no other rational explanation.
Yeah, so I'm looking at your latest report. The company has nearly $5 billion US in cash. Where did they get that from?
Well, they issued stock. So, they had about 300 million shares. Actually, they had more like 240 or 250 million shares when Ryan Cohen came in and kind of kicked out all the management team. They've gone from, call it 250 million to about 450 million shares. And they issued, 200 million shares at very high prices. So, they went from net debt of about 800 million to net cash of about 4.7 or 4.8 billion. He's raised about $5.5 billion by issuing new stock to, a never-ending stream of, faithful investors who think he's smarter than they are. And maybe he is. He certainly got their money at very high valuation.
Let's have a look maybe at a 5-year chart for GameStop. It's interesting. I mean, stock. There's always been a market for speculative stocks, but it was interesting. I thought the way there was a social media gang pushing these shares higher.
Yeah, I mean, it made sense back into 2021. There's a fellow named Roaring Kitty, Keith Gill. He was spot on. I mean, he looked at GameStop and he identified that they were structurally, set up wrong. That the short position was greater than 100% of the shares, and that's just because of synthetic shorts, option trades. Mm-hmm. And he said, if we can put a little buying pressure on the shares, then we're going to cause the shorts to have to buy stock in order to cover their positions. And he was right. Pre-split, the stock went from something like, 10 to something like 400. I mean, it went up like crazy. He made, I think, $1 billion on it. Ryan Cohen made a ton of money. And then on the way down, Ryan Cohen issued stock 3 or 4 times, as I said, over 200 million shares, and raised that $5 billion swing from net debt to net cash. So they took advantage of the shorts and it worked. Now it's kind of an unshorted stock with no real growth story, and investors making a bet that Ryan Cohen's investment in Bitcoin will make them more money than a direct investment in a Bitcoin ETF. I don't really get it. If he said he was going to do something revolutionary, like turn GameStop stores into cannabis stores and get the Trump administration to legalize that, then that'd be great. But that's not what he's doing.
I guess investing has always been gambling to some extent. Wall Street dresses it up. But do you think with the advent of Robinhood and these meme stocks, are we blurring the difference between gambling and investing?
Well, we're making it easy for consumers to make these small bets. And, it's no different than having a DraftKings app on your phone or something where or playing the lottery. The easier we make it for people, for people to lose their money, the more likely they are to do so. We're having a breakdown in regulation in the U.S., so I don't think anybody's going to look at this at least for the next 3.5 years. So I think this is perfect timing for GameStop to exploit the uninitiated investor, and they're doing so. I don't think there's very many, famous investors. Warren Buffett certainly is not buying the stock as a value play.
Yeah, it is interesting. I mean, after a century or more of restricting gambling in the past decade, we've seen, I'm not just talking about the stock market, but sports, et cetera. We've just seen this thing open up.
We have, and I think it's great if people have a lot of money and they make modest bets. I mean, if I lose $10, it's not going to cause me to miss my mortgage payment. But I think there are lots of people in GameStop stock that have their life savings tied up. And, I fear for those who have leveraged their position so that they're actually going to be bankrupt if the stock craters. It is worth something. I mean, that $4.7 billion, it's about $10.65 in cash. The fact that they are at a break-even level with an interesting trading card business, I gave them $1 of enterprise value. I'm willing to argue with somebody whether that should be $2 or $3 or $5, but it's just not $15 or $18. $15 or $18 of 447 million shares. I mean, that's billions and billions of dollars for a business that probably is doing $200 million a year in revenue.
Right, and the stock jumping to $29 US today. Yeah, it's hard to see trading cards turning into that big a franchise. Thanks so much, Michael. Always great talking to you. Michael Pachter,